Hi, this is Alessio. Hope you're well. In this video, I want to take a look at the chart of gold. And actually, I want to bring your attention in this video to an important chart of gold that very few people are paying attention to. We'll discuss this in a few minutes. Before we start, let me first of all say that, as you probably know, I like gold. I'm actually a huge believer in physical gold. As you can see here, I actually own some gold bars, some gold coins, like the South African Krugerrands, Britannia gold coins, and so on and so on. And so naturally, I keep an eye on what's happening to metals. Now, as you can see here, last year, so you may recall that in the summer of 2020, gold went through a massive parabolic rally that you can see here. You can see that a massive rally occurred, a parabolic rally occurred in the price of gold. And you may remember back then, a year ago, I warned that this parabolic rally in gold was likely a very dangerous rally. As a matter of fact, I showed you this chart you're seeing here, and I said, look, gold is very likely overbought, overbullish, overvalued, and we're reaching a potentially dangerous zone. As a matter of fact, in my video last year, I pointed out that the 2076 level was likely going to be a major resistance, and I said the more likely scenario for gold is a correction, a corrective drop. So as you can see here, since summer of last year, when almost everybody was going totally crazy and gaga for gold, we were right to be cautious, and you can see gold since then has dropped quite significantly. Now, here's what's interesting about this. In August of last year, Warren Buffett, who, as I'm sure you know who he is, Warren Buffett announced that he was buying the stock of Barrick Gold. Here's the chart. Let me show you. This is the chart of Barrick Gold, as you can see here. And essentially, Warren Buffett was buying into the stock probably at the worst possible time, when it was extremely overbought and indeed overly bullish. And you can see what's happened to Barrick Gold over the last several months. It's just plummeted and plummeted lower. The most recent headline here on Warren Buffett says that he sold his stake in Barrick Gold in February, in fact, just last month. So essentially, he made quite a bit of a loss on that. Now, again, here's the bottom line. I think a lot of people just assume, just because Warren Buffett is doing something, that it has to be correct. Again, Warren Buffett is a pretty smart guy, okay? I'm not being disrespectful here. All I'm saying is that people just automatically assume that whatever he does has to be correct. In fact, as you can see here, he does get it wrong from time to time. Here's something I want to bring to your attention. I actually think very few people know about this, that when gold topped out last year, in August of last year, look what happened. It happened at exactly the same time, at about the exact same time when bonds topped. So this is the chart of the 20-year treasuries. TLT topped just one day before gold topped. Okay, very fascinating chart. You can see that both gold and bonds pretty much fell from that point onwards. Bonds actually have fallen quite dramatically and more aggressively over the last several weeks and months. And here's something else I want to show you. As gold topped out here in August of last year, look what bottomed. Interest rate yields. This red line you're seeing here. Interest rate yields bottomed out and they rallied. And in fact, as you can see here, interest rates have been rising quite aggressively over the last several months. So we can see that gold topped at about the exact same time when interest rates bottomed out and began to rally. And it actually moved in opposite directions, as you can see here. So I think what happens to interest rates and indeed bonds over the next several weeks and months can be very important and have a major influence on the price of gold. And as you can see here, there's the chart of TLT, the bond market, the 20-year treasuries, which has been falling quite dramatically. And again, as yet, there are no signs of an uptrend. Again, we're not seeing yet the signs of a bottom, but it's something we'll have to keep an eye on here, because I think what happens to bonds over the next several weeks and months indeed could influence the chart of gold as well. So here's something I want to say about gold here. Let me just squeeze the chart a little bit here so we can write this down on the chart. One interesting and important charting strategy, which I quite like, is called the 3 U's. Now, what is the 3 U's? Let me explain. This strategy can be very helpful when doing chart analysis as to finding potential bullish turning points when a chart may be about to go from bearish to bullish. The first U is this, that the price action, indeed the chart of the market, must be unpopular. Or basically a polite way of saying that the market must be hated. Now, is it true that gold has become hated over the last several months? Yes, I would say so. This chart, courtesy of Jason Gippert of Sentiment Trader, we can see that the sentiment has been turning against gold recently over the last several months. In fact, we can see that indeed the sentiment among the people out there is quite negative. Again, it's not surprising given what's been happening to gold. The major drop last year, about an 18% drop from last year's high to the trough there, has indeed crushed people's opinions and sentiment about gold. So is gold unpopular or hated? Yes, you could argue that's the case. Now, what about the second U? The second U is that the market we're talking about here must have become undervalued Now, can one say that gold has become undervalued since last year? Yeah, you could argue that. Of course, it's debatable. Not everyone agrees about this, but you could argue that since the highs of last year, gold has become relatively undervalued. And what about the third view? The third view is that you need to see an uptrend. And I'm sure you know what that is. Here's the question. Do we see an uptrend right now on the price of gold? I would argue no. I don't think any chartist can argue that right now we're seeing an uptrend. So for an uptrend, you need to see a series of higher highs and higher lows. We just don't have a series of higher highs and higher lows to create an uptrend on the gold chart. And again, at the moment, given the way things are standing right now on this gold chart, as yet, we do not see that third U, the third component, an uptrend. And let me just also mention this. Because of what's happened with the relationship between gold and bonds and gold and interest rate yields, I think it's also important to keep an eye on what's happening on the bond chart as well, because of the relationship. And again, as I mentioned before, as yet, this is still a downtrend on bonds. Bonds have been crashing really hard. This is still a downtrend. And as yet, we're not seeing the signs of an uptrend in bonds either. And I think once perhaps we see an uptrend developing in bonds, that may also impact the price of gold in a positive light as well. By the way, let me also mention this. Some of you may be thinking right now that, well, hang on a second, Alessio. If gold goes up, if gold, let's say, does bottom out and go up in the next few weeks and months, we shall see. But let's say gold does go up. Doesn't that mean we're going through inflation, an inflationary period? No. Because as you may recall in my video yesterday, I showed you this. For inflation to gain in probability, you need three things happening at the same time. Simultaneously, three things. What are they? Well, firstly, an interest rates increase, rising interest rates. We've got this. Yes, that's true. We also have an increase in foreign currencies, perhaps debatable, but you could argue that. But also, very importantly, rising gold prices. But here's the thing. All three must be happening at the same time. And I actually think that's not what's going to happen here. I think what probably may happen is that, yes, even if gold prices begin to rise, let's say gold prices do bottom out, and let's say they do go up in the next few weeks and months, for example. Again, we shall see. But the bottom line is this. I think even if gold prices go back up, the question is, what's going to happen to interest rates? Will they go up as well? Will they continue the uptrend? I actually think it's less likely. I think it's much more probable that interest rates will just do the opposite of gold, essentially opposite to bonds and gold, and go in the opposite direction. So for example, if gold goes back up, interest rates may potentially go down. As we've seen before in the past, how when gold, for example, as you can see here, when gold topped out here, indeed interest rates bottomed out here, and they both went in opposite directions. That's what I think is much more likely to me. So I personally think that what's going to win out over the long term is falling interest rates and increase in bonds, which means that over the long term, the forces of deflation will probably win out. And again, see my most recent video for more details about that. Thanks very much, guys. Again, please remember, if you're not subscribed, please do subscribe today. And also please hit the bell icon to make sure you're notified of our future video updates. Thanks a lot. Bye for now.